Contractor tax calculator example in 2023. Today we're going to look at the case of a contractor who is working in the UK and is wanting to consider the tax effects of working as a sole trader, through a limited company, and via a pay umbrella company. We will use the exact same set of data for all three contractor tax calculator scenarios, and let's assume that the contractor is going to be working for 3 years on various projects. In this scenario, our contractor is Ella, limited company contractor. The first scenario will have Ella working as a limited company contractor. Let's assume she works outside of IR35 for a small business and has £85 per week of business expenses. Next up is sole trader. We will use the same scenario as before, and that this person is contracting directly to a small business for the same daily rate as the limited company scenario. Finally, we will look at Ella working as an umbrella employee. Here the tax planning options are extremely limited, and to compensate for the umbrella worker not being able to claim expenses, we will increase her day rate by £20 per day. For all the calculations, we will use the same income tax rates and tax bands that are currently in place for the 2023-24 tax year. Our scenario: Ella has a new 6-month contract working for a small company just outside of London. Her agreed contract rate is £350 per day. She intends to complete similar roles at a similar rate over the next 3 years for various clients. Ella has no other forms of income, and is on the normal 1257L tax code for 2023-24. She intends to work 5 days a week, 45 weeks of the year, and wants £1,000 net pay for each week worked to meet her living expenses. Firstly, let's look at the umbrella tax calculation. This is the most straightforward with no tax planning options available. On average, Ella gets a weekly take-home pay of £1,064 and across 3 years would pay £92,537 in tax. Next is the sole trader tax calculation. All her income gets taxed in the year it is earned, and she gets some tax relief on her business expenses. In this case, Ella gets a weekly take-home pay of £1,272 and across 3 years would pay £64,530 in tax. Finally, we get to the limited company calculation. Here, Ella leaves some of her income behind in her business, and extracts it tax efficiently when she comes to close down her company. She gets a weekly take-home pay of £1,000, and across 3 years would pay £57,267 in tax. Summary: working through a limited company will be the most beneficial for Ella from a tax perspective, and she will save around £7,000 in tax over a 3-year period. The ability to withhold income from being taxed at the personal tax rates until her company is closed down in this case made a big difference.